Hi, I'm Ali Patterson, and welcome to today's episode of the Paytech Show. In this episode, we look at how the payments industry is changing. As we bring in 2021, we wanted to understand how the previous decade has changed the very infrastructure of payments and what this means for the new decade. With regulations and technology around payments evolving rapidly in Europe and Africa, we wanted to see how these diverse markets have been adapting to never before seen changes. How will the banks keep up? How has the change in payments changed the nature of banking? Joining me in our virtual studio today, I have Marc from Intix, a company whose mission is to provide solutions to enable any type of financial transaction to be assessed, tracked, and sent rapidly. From our European perspective, we bring in Societe Generale's Eric Bayle, who delivers transaction banking at the large French bank. With all the changes coming from SWIFT and cross-border payments, we're really excited to hear what he has to say today. First up though, over in South Africa, our man on the scene, Chris Miles, talks with Sajid Gani, the head of operations for Standard Bank. Sajid is a man who believes in creating a financial institution with massive exponential growth, something that will become all the more important in this rapidly changing vertical of finance. So who better than to give us an overview of the payments landscape as a whole?
So I think, firstly, if you take a step back and if you think of the broader banking landscape, and in fact even beyond banking, we're witnessing I would say an extraordinary change happening at an exponential level. It's pervasive. We're seeing increasingly rapid digitization, and that digitization is underpinned by this incredible exponential growth that we're seeing in technology. And interestingly, while this exponential growth is obviously fueled by heightened customer demand and expectation, it in turn also fuels more demand and more expectations by clients. So a self-powered and self-fulfilling cycle, if you like. And this change, I think, is probably more evident and pronounced in the payment space. And I think the reason I'm saying that is customers are demanding more convenience. They're demanding cheaper and faster payment solutions. And when I say faster, I mean instant. When I say cheaper, I mean almost free. And rightfully so. And if I have to think about that, I think that is where the challenge lies for traditional banks.
What is, and I do find it incredible how that we are where we are today with payments, but what is changing at the moment in payments? What's the element that is accelerating fastest in terms of its pace of change?
There's not only one element, there are many elements, first of all, and I would say that the best way to describe it is to use the opening sentence at Sibos from SWIFT, and I'm going to quote. They mentioned instant and frictionless end-to-end transactions from one account to another, anywhere in the world. And I think that's the key message. Okay, now, how did we get there? There has been, for the last years, a lot of digital transformation. Okay, and this digital transformation has been even accelerating. Okay, so this digital transformation combined with new digital players and also the change of expectations in the treasurers. Treasurers today, they have the same, I would say, customer expectations and customer experience. They want the same customer experience as the one they have as a consumer when they use their banking app, okay? So if you take all that, what they expect today, what the corporates are expecting, it's user experience, trustability, security, and predictability. So if you take these points, you have what are the expectations. To reach these expectations, banks, but not only banks, PSPs and third-party providers, software vendors, PSPs in general, are going to rely on leverage on new technologies. And these two technologies, I mean, you have a lot of buzzwords, but still they are there and they exist. It's APIs, it's AI, it's machine learning, it's blockchain, DLT, and of course the use of data.
Let's look at the actual infrastructure behind payments. How have you guys at Intix helped banks deal with the significant changes to the the payments plumbing, so to speak? And how do you avoid the banks becoming effectively the dumb pipes?
Yes, I would say, well, today, so Intix is a product company, which brings it advantages in terms of having a fast time to market whenever you want to address opportunities, and it doesn't take 2 or 3 years before the bank can actually start using your technology. And so we have today two main, let's say, products that are addressing the transaction data challenges for banks. On one hand, we are offering technology that makes the accessibility to data easy. And it still sounds as a very obvious thing, but I mean, that also was the initial reason why almost 10 years ago Intix was created, to really make that possible. And so what we do there is we are going to make data as accessible, and that solution is called X-Trail, a bit like the way that Google is making data accessible on internet. So we are going to index the whole data environment, let's say all data sources of a bank. We are going to make that data accessible through a very rich index that we are going to build, combined with the standards knowledge that we have available at Intix. And so that really makes it being not a repository, but at least, let's say, a single window solution to address all the different data sources when it's talking about transaction data, of course, within the bank. And then typically banks use our technology to keep that access to their data for a very long period. Definitely in the context of compliance that is required. So we have customers keeping data available for 10 years and even longer. And then on the other hand, there is a second challenge that we want to address, a bit building up on our first experience, is that banks not only want to look at old data and keep that for let's say, reporting and compliance purposes, but also the fact that customers have become much more, let's say, have much more stringent requirements in terms of very timely reporting, timely information, and also they want to make sure that whenever you live in a real-time world, that the transactions are really processed real-time, and so that beneficiaries get their money also in a very fast manner. And so in order to facilitate that, Intix has developed a solution called X-Trace that is really doing an end-to-end tracking of transactions within the organization of the banks, so that whenever there is kind of a hiccup somewhere in a transaction flow, we are going to be able to inform the bank really instantly on that problem, so that they can, let's say, look for a resolution of that without having, in the end, a customer impact. So that is really something that we see is on top of mind of our biggest customers today, and that we are addressing with the X-Trace solution.
And I think today, when people talk about data science and when people talk about big data, what they really mean is insights. So when you look at the data as is presented to you, what's the underlying story that it's telling you? Sure. And that talks to the concept of insights. And that's a journey that we're on right now with Intix. It's to look at the underlying data across the value chain and to then understand, interpret, what does that data tell us about the client? What does that data tell us about our internal operations within the bank? And more importantly, what are the insights that you can gain from that to make a decision and that will help you better service the client? Sure. And that's the real power of data science. And that's the journey that we're on with Intix. It's saying, show me the data across the value chain as it pertains to the client. And then more importantly, help me to interpret the data, tell me what the insights are, so that I can then make strategic decisions in relation to either the bank or the clients based on what the data is telling me.
SG is the largest customer of Intix, so that's one fact. And the second one is that they are, the same way that they are very agile, meaning that we implement it, and as soon as we have a requirement, we come back to them, they took it into account, and it's quite easy for them to adapt the product to the needs. And actually, this is quite, at the same time, helpful and useful. Helpful and useful because, first of all, when you develop something in-house, you need to keep the people that developed the software or the tool in-house to be able to keep monitoring it and amend it, upgrade it, etc., etc. When you do with a third-party provider, whatever version comes after, you're always going to benefit from the latest version first. The key element here is, again, customer experience. Okay, I think all banks today are thinking about customer experience. What can we do? What should we do to improve the customer experience of our corporate and retail customers? Okay, so that's the key thought. The second thing is, banks realize now that they are not software companies. So when not so long ago, as you said it, banks had the tendency to develop everything in-house because they didn't want to rely on a third party or add some internal decision process, etc. Today, there's more and more opening to third-party providers that are software companies and that are dedicated to producing, I would say, specific applications to provide specific services that are going to complement the bank activity of doing payments. Okay, so this is important. You mentioned Intix, and that's exactly what we did with Intix. A bank has the obligation to store their financial messaging. Okay, we have to. The minimum requirement, and the SWIFT requirement, is 13 months. Okay. Now, I think it's very important for any organization to keep the data for much longer than that, for two reasons. The first one is a compliance reason, so I would call them the internal customers. If you have a query about a payment that dates 2, 3, 5 years ago, you need to be able to produce the information quickly. The second is vis-a-vis our external customers, so the corporates and the retail. If they ask for a specific query about a specific payment, you should be in a position to retrieve the data about the transaction quickly. So that's what we did with Intix. We chose Intix in 2019. We implemented Intix and we are currently rolling it out, and we are going to be fully live in production by H1 2021. We are going to use Intix for archiving of financial messages as well as instant access to transaction data. These are the two of the 4 use cases that Intix is offering. It will allow eventually 10 years of data to be stored and retrieved, I would say, instantaneously. What we see at the moment is that it's much faster and it's actually quite user-friendly. And it's used by our transaction processing teams, of course. I mean, they process the payment, but also by all our middle office when we have a customer query or sometimes an internal query. So this is what we did with Intix. That's one example of what banks can do in general with third party.
I love that banks 10 years ago loved to have an on-prem data center, loved to know who had the keys to the server room. And now it's they're opening up, they're working with third parties. They're now an ecosystem as opposed to a high-walled castle. Where do you see yourself within this this marketplace, within this mechanism, in terms of how you're working with banks and also other third parties to enable elements such as cross-border payments?
Well, I think what you say is that everyone's being very, let's say, keen on having its own organization. And what we are seeing now is that with all the different initiatives that and innovations that are going on, both on the way that payments are being exchanged, and we already spoke about that, but also in the way that people deal with technology in itself, we do see that, okay, banks are not really fast movers, we all know that, but that there is a differently compared to other industries. But what we nowadays see is that there are the first, let's say, ideas within banks to start thinking about opening up their infrastructures to also become, let's say, thinking about things like the cloud. That was something that I would say 2-3 years ago was really something that would not be discussed because data was their asset, that was their personal, I would say, information that they did not want to share or have the risk of sharing over other systems or platforms. And nowadays you see that we have a few customers that have started to contacting us and say, well, we are considering looking at cloud type of environments. Is it something that we could also move in together. So we do see evolution there. Will this go fast? No, but I believe that if we would talk again in 5 years from now, they probably would have a number of large banks that have really revamped their infrastructure. And on one hand, also, they have to live with the new technologies that are going to be implemented much faster in that type of environment, and they have to do that because they will have to keep up with the new entrants in the financial world, people that have not a lot of legacy like they do, but people that just start, let's say, today, and they have all the new technologies available from day one. So if you want to keep up with that, you really have to adapt. So I believe that in 5 years from now, we will see technology-wise big changes, yes.
Looking at transaction banks as a whole, Swift GPI is an absolute game changer. What are still some of the limitations around this, and what are still some of the biggest challenges when doing these very large cross-border transfers, especially if not every bank is on the GPI?
Of course, you have many things. The very first one is, well, the competition from fintechs, okay? And also the involvement of large card players like MasterCard and Visa, who are building, I would say, their own payment infrastructure, okay? And the whole process is to rely on local bank accounts to make a cross-border payment. So instead of sending the money overseas, you send the money locally, then you ask your bank to send a local payment in the country when the payment is supposed to be done. So you convert, I would say, a cross-border payment into a double domestic payment. So obviously it goes faster, and you eliminate some of the friction that comes with correspondent banks, okay? Now, the other challenge you're going to have, it's regulation, and it's the screening. Every bank in the world has the obligation, and it's not optional, it's clearly an obligation, to screen the payments for sanctions on embargo and anti-money laundering, okay? This, at the moment, each bank is doing it individually, meaning when you send the payment, each bank along the chain is going to do the screen and with their own tool, and they are going to come up perhaps with the same alert many times, and each time it's going to be stopped, the alert is going to be cleared, and the payment is going to be released. That can lead to some delays, and we do see sometimes some payments that are perfectly okay, but they are still blocked on delays because the banks have the obligation to make these controls. Swift is working on an initiative to have a single screening, and I think it's also linked to the Swift GPI, I would say, infrastructure, whereby the first bank in the chain would do the screening, and the other bank would rely on the screening done by the first bank. So this is something in the future because it's more complex, and it requires more approval, I would say, between banks. So these are the big challenge. Another challenge, perhaps, and it's at the same time a positive and a negative challenge, it's the adoption of 20022 XML. It's a negative, if I may say, challenge because it's really a cost for the banks. They do have to change their infrastructure, they do have to change their formatting, etc. It's also going to be a challenge for corporates. Some of them will have to move to XML. It's not going to be an option. However, it's a positive challenge in the sense that it's going to create a standard and it's going to allow interoperability. Okay, all the existing real-time payment schemes at the moment rely on XML formatting. So once you have XML 2022 everywhere or XML messaging, the interoperability between, I would say, the cross-border, the high-value, and the real-time payment schemes is going to be easier. And you could send a cross-border payment that will integrate into a local faster payment schemes, for example, and the payment is going to be almost real-time.
What are the typical challenges for Standard Bank in Africa with regards to payment processing?
So firstly, I think cross-border remittances is a vital space in Africa, especially given the context of Africa with migrant labor across the continent and the subsequent need for workers to send money home. But it's more than just sending money home, I guess. It's about sending money home, but doing so expeditiously. In other words, get it there fast enough to provide for their families almost immediately. It has to obviously be done at an extremely low cost, given that we know, migrant workers, tend not to earn that much, so every penny really counts. And it has to be simple, so that the families back home don't necessarily struggle with a process or a technology, etc., that they might not fully understand. So the customer experience here is of vital importance. What makes it difficult for banks to meet this demand, I guess, apart obviously from being hamstrung by legacy systems and channels, general infrastructure is a concern in many of these countries, and we know that telecoms, etc. And if you then overlay this with the disparate regulatory environments across the continent in all the different countries, the complexity increases tenfold. And earlier I spoke of some of the new entrants into the market, some of the new digital banks, etc. They've stolen more than a few yards on traditional banks, as they've started with a clean slate. They're able to fully leverage new technology, and they're not that hampered by legacy as traditional banks are. And if I think back, the success of M-Pesa in Kenya is a classic case in point.
Let's talk a little bit about your transaction tracker and what that can do in addition to having an external tracking feed such as the Swift API.
Yes. So what we do actually is that the difference with the first solution we have, X-Trail, is we're looking at an individual transaction and is going to make sure that transaction with all the logging information remains accessible for whatever the next 10 years, so that if there is compliance or type of related question, you get an easy access to all that data. On the other hand, with X-Trace, so our tracking technology, there we are looking at a transaction, of course, but we are looking not at a individual transaction only, but actually at all events in the full life cycle that this transaction is living through. And by having that information being fed into our technology, we have the opportunity to really monitor this transaction evolution in the organization of the bank in real time. And that, of course, real time and then transparency. And if you add all these things together, then you come to something that means that whenever something is not going according to plan, you have really the opportunity to react also in real time, very fast, so that at the end you do not get customer impact. And that's actually the thing that we see it brings the most value. We have one of our customers, the CEO of a large bank. He says, for me the most important thing is when I have the opportunity, when there is a problem in the organization, at least in the processing of transactions, is that I can know the value at risk at any point in time. Imagine that you don't know the value at risk, but you have to take a decision. You cannot prioritize. If I tell you I have 2 transactions stuck, but they all have a value of 500 euros, well, that's not that bad. But if they have a value of 100 million each, then we're talking different business. And then we're talking different priorities. And so that is something that we see that is really important in the actionable requirements of our customers. And so that's what we can address with our technology.
Well, thanks for watching this episode of the Paytech Show. It's been fascinating to look at some of the biggest changes happening around the world in payments today. From hearing the issues faced by numerous African nations and large financial institutions, I feel like we've learned how important transaction technology will be and will become in the future. As Marc said at the end, all of these issues are able to be actioned and remedied now. So with that in mind, thank you and goodbye.